Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. As always, wearing a shirt that's at least two sizes too small. Man, the delivery. I just messed up the delivery. How are you, my
You have
friend?
a vowel at the end of your name. You know this is the right size shirt.
Oh, there's no question about it. You should. My t-shirt selection is the same. I put it on. Tighter the better. It's just what we do.
Physical fitness be damned. It doesn't matter. You just tuck it under the belly if you got one, and don't worry about it.
Just a quick story before we bring on Albert is that, I own a bar called Brant's Palatine, Illinois.
Yep.
One of my favorite stories ever. We hired a bartender who had been a bartender at several Palatine bars. Terrific figure, let's say. I don't know. Can you still say that in 2025? But anyway, so she used that quite well to get a lot of tips at the other bar. And the classic line, she said, we have all our clothing up in one office and she's picking out, and she goes to my partner. She goes, "Oh, the medium fits perfect. I'll take the small." And I was like, damn, that's a girl who knows how to market.
I remember you telling me that story.
Anyway, there's a lot of markets stuff that we want to talk about. We are going to bring Albert on right now, and we're going to do more heavy market stuff and maybe technical analysis toward the end of the show. But we want to talk geopolitics with Albert Marco, who is brilliant and a cranky old man. Let's bring him on. Not a cranky old man, by the way, which, by the way, I mean that as a positive. I'm a cranky old man. You are just someone who doesn't put up with nonsense and bullshit. No. And I love that, by the way. Yeah. So let me
might be younger than both of us, too. I'm not sure.
How are you, old friend? Everything good?
Good. Everything's good. How are you guys?
Really good.
Good.
I forgot to only have you for a short. What's that?
I forgot to wear the tight Italian shirt, but I'll do my best next time.
How dare you?
We'll break for a minute. Go grab one as tight as you can get it.
Tight as you can get it.
Okay, so anyway, there is some stuff I want to talk about. I want to get right to it because we're on a little bit of a tight time frame. So I don't know, did you guys, either Luke Groman was on Macro Voices last week, and I don't know if any of you guys heard that episode, but he was talking about our relationship with China. And it's just amazing to me because Luke is of the opinion that this ship has sailed. We gave China the power by letting them touch every supply chain globally. All rare earth minerals come from China. The question becomes, are we too involved with them to even joke about having some sort of trade war? Do they have the leverage or do we have the leverage?
Oh, that's a tough one. I'd say neither, right?
That's a good thing if neither does, right?
Neither does, right? Yeah. Obviously, the U.S. has a big dependence on China for refining capabilities. The whole rare earth metals oligarchy that people say that China has it's not accurate. I mean, rare earth metals are not rare. The refining is a problem. However, China has a problem where they need fresh water to do the refining process. And I think it's like for every 1 ton of rare earth metals, you need 20,000 gallons of fresh water, right? And where do they get that? But nowhere but the Himalayan watershed, which is a big geopolitical conflict point with India and China. So, the whole argument that they have the advantage is, I don't really buy it at the moment. On the surface, yeah, sure, you could say that, just, looking at superficial things. But once you start digging down deep into it, I mean, there's always second and third level, tiers of complex issues that you have to address. And if you do that, China has an issue.
Okay, so Luke's contention to it. And by the way, I just learned what antimony was this morning. I'm sure both of you guys know what antimony is, the metal that's used in defense. And we are opening up a mine and kickstarting a mine that's been open in the United States that the CEO was on Fox Business this morning talking about how he can satisfy 35% of our country's need for antimony within the next couple months. I never knew what the hell antimony was. The question is this, is in this country, the problem seems obvious. The environmentalists, particularly the fringe, won't allow us to do this. And that's why, because of their kicking and screaming and clutching their pearls, is what pushed it to China in the first place. It's Thomas Sowell. Be careful what you know. There are no solutions. There are only trade-offs. But the question becomes is, they're still here and they'll go crazy if we start using that kind of water to mine these minerals. How are we getting around that here?
That's a good question. That's going to take a lot of political pressure within Congress to get those regulations overturned or at least pushed back. Obviously, if it was a national defense issue, the Trump administration or whatever administration could always, call on that and get rules stopped, basically for whatever is needed for national defense arguments, honestly. But the thing is like the way I look about the refining capabilities in North America, and I say North America because we do have Mexico, we do have the Central America, we do have Latin America that could theoretically jump in and start refining capabilities for us, where obviously would get away from the Chinese sphere of influence and bring it back to the North and South America and our hemisphere. I think that was probably a better argument than trying to get it done inside the United States in the next 10 to 15 years.
Yeah, I read something recently about that we have a tremendous amount of rare earths, mostly light, not heavy. Some in North Dakota, some in Virginia, some in upstate New York. And the biggest problem was regulatory and the cost to mine here, because doing everything here is more expensive than doing it where they have slave labor. The Uyghur Muslims, before, when they're not being killed, working in those mines in China. I have a question about gold, Albert. Yeah. So,
popular topic.
yeah. So, Jimmy and I both been long gold for a while. We talked a couple of weeks back about maybe, I don't know, cutting the position a little bit or at least hedging it. We agreed that it probably wasn't the right time. I'm starting to think that now is the right time. Now, in reference to China again, they're still consuming, they're still buying, they're still storing up in their central bank. But I looked the other day, they're only sixth globally in terms of reserves of gold. Do you think they're playing catch up, de-dollarizing, or both?
I don't think they're de-dollarizing. I do think they use it as an arbitrage and a backup plan to stabilize the yuan. The majority of this gold spike is most likely due to American exuberance and worry about national policies and inflation here domestically, to be quite honest with you, right? I mean, the gold has been suppressed for 40 years, 50 years, and now it's starting to catch up. The problem becomes that at 5,000, it'll introduce some stress to the Treasury and the Fed. So I don't really think they'll want to be keen on letting it get that far, especially without a decent pullback, probably around 3,000, 3,250, whatever.
Describe the stress for me, because I'm kind of lost there.
Oh, well, it has to do with the whole reserve currency status, right? You certainly don't want you start getting to 5,000 on the gold spot price. It actually fixes Chinese banks, right? Because they've accumulated so much in their own banking system that it'll actually help their debt issues, which is advantageous for us, but not advantageous for the Chinese at the moment. So they certainly want to get that debt taken care of, and then then the drumbeat of, oh, does the U.S. dollar have reserve currency status, and 10-year argument comes up. Realistically, it will, but when you start undermining that argument that the U.S. is solid in that respect, well, capital flight comes out of the United States and it goes to places like Asia and Europe and so on.
Bobby?
Yeah. So taking that a step further, then, don't we get the same sort of benefit, considering we're either first or second in our gold holdings, or do we start to hold something that is competing with the U.S. reserve currency status?
Yeah.
Well, it's tough because the United States wants the dollar. I mean, it is the dollar is the trade of everything, right? But we don't use gold the way that the Chinese use it in terms of arbitrage $4 to fix their debt. We don't use
that makes sense.
We don't sell it off. The Chinese will be buying and selling, on a continuous basis through proxies. You can forget about the numbers that are publicized on whatever, newspaper or what magazine or blog. Those are all fake. No country will give you an honest total of the reserves and their buys and sells. None.
Nor should they, right?
No, it's a national secret.
And no doubt about it. So tell me this, and this question is going to be to both of you guys. And actually, Bobby, I'm going to start with you. If tomorrow comes out and it's Xi and Trump holding hands and saying, we've fixed this problem, we've negotiated, which, by the way, I don't anticipate happening. After I saw the picture with Xi, with Putin, and with Modi, holding all shoulder to shoulder. That was definitely a shot to Trump. So I don't anticipate it happening quickly. I anticipate it happening at some point in time. What happens to the gold market then? If the logical thinking is, okay, China is going to be buying treasuries again because we've agreed to this, whatever. Does gold back go down to 3,000 like Albert just said?
I don't know about 3,000. I think part of the gold story is also the inflation picture and the Fed not fighting it. And I've said this on this show before. My opinion, you guys can disagree if you want. Gold's not an inflation hedge when the Fed is raising rates. You look at the performance of it, it just doesn't hold up. It's an inflation hedge when the Fed either doesn't notice it, which is 90% of the time, or they've chosen not to fight it, which is probably now. That's probably the case right now. Now, I think they honestly believe it's going to come down a little bit, but they also honestly believed it was transitory a few years back.
I don't believe they believed it. But anyway, Albert.
Yeah, no, I agree. I mean, the inflation is the boogeyman that nobody really wants to talk about still. I don't know why. Everything still is rising for a certain margin, even though they fake all the numbers. But, I believe that the U.S. economy is going to rip going into the midterms, whether it's real or not. The data is going to be put out by the Trump administration, right? And then they, to combat inflation, they're going to start hiking again. Which is my expectation. And if they do that, I think gold retraces, maybe not 3,000. I think that may be a little bit aggressive on my side. 3,250, 3,500. I can certainly see that in the near term. I would be a buyer at 3,000 and 3,200.
Yeah, because to me, gold and Bitcoin are both the kind of stop the ride I want to get off trade. Like people again, in the last 2 months, I think it's fear of missing out, filtering down to the retail level. And I have anecdotal evidence toward that as well. So that last move higher is that. But I think gold and Bitcoin are kind of a lack of confidence vote in our financial system, particularly as it relates to our stewardship of the currency. And I don't see that changing anytime soon. Do you, Albert?
No, because Bassant's out there faking that narrative all day long, saying that the U.S. currency is in trouble and give me the power to do this and do that. Well, the offshoot of that is you have commodities ripping, gold specifically, and Bitcoin. Bitcoin is just, I'm not a big crypto guy, so I tend to ignore the whole Bitcoin move, but the gold move, it's a tangible thing. It's an asset. It's used across multiple sectors, whether it's jewelry or industrial, semiconductors and whatnot. So I do like that far better. I don't like the argument that it's going to replace the reserve currency. Right. I don't like the whole investment thesis of that. Right. I do like gold in terms of a preservation of wealth, just to offset the absolute stupidity in the U.S. government's fiscal policies. That's a great argument for gold.
Bobby?
Yeah, I have a question, but I want to put up a question to all of us, and I'll just basically say it's a question to you two guys. From Jonathan Barnett. Jonathan says, hey, fellows, can't the dollar keep its primary currency status, but gold becomes a standard for global central bank reserves? Now, there's an interesting, I don't want to say play on words, but choice of words there, where it keeps its primary currency status, not reserve currency status. And this is and that'll lead me to another question, but go ahead, Jimmy.
I love this question. Can I answer first, Albert? And then
actually, Albert's on a time limit. So
Albert, you answer first. You're on a time limit.
No, well, I mean, for me, I don't think that gold can be the global central bank reserve, because then you start toying with hyperinflation. The problem is like if you take out your dollars from a central bank reserve, which you need for settlements, no matter what currency you use, right, and you put it into gold, what happens if gold retraces to 2,500? What happens to those central banks? And then you start talking about Luke Gromen and Brent Johnson's arguments of the U.S. dollar milkshake theory and whatnot. Could you imagine how many dollars are going to be needed to stabilize all those central banks if something happens to gold and it goes to 2,500? That's my argument against that.
That takes away my answer, because I thought that question to me, Jonathan, that seems relatively reasonable. I mean, we are already approaching a time, and that's basically just based on the value of gold, that the global reserves, by the way, I used to have the chart in front of me. I can't remember what it was, Albert, because the dollar amount of gold in global reserves, non-US, is getting close to the amount of dollars held in global reserves as well, right? Just by virtue of the fact that gold's gone through the roof. So I've already, Jonathan, to your point, I think we're already seeing it play out in a mild way. But to Albert's point, I don't think it accelerates beyond it. I still think that most of the global trade is going to happen in the dollar. And one thing that really amazes me is that we've all talked about this de-dollarization trade. And I've been very clear, by the way, that my buying and stockpiling gold is not believing in the de-dollarization trade, but believing enough other people believe in the de-dollarization trade that it could fuel gold. That's our ultimate job as traders and investors, to figure out what the herd's doing more than anything. So I do believe, but again, the point is that everybody's got a plan until they get kicked in the head or punched in the face or whatever the Tyson quote is. And the markets, the global markets really haven't shook hard in a long time. I know they did in 2020, but that was exogenous. I mean, something that's really about the plumbing of the financial system. Let's see where they go then. I want to see if they go to dollars, if they go to gold. My suspicion is they still go to dollars. Does that make sense, Albert?
Yeah. Oh, for sure. They're going to go to dollars. There's no alternative right now. I mean, if you go to gold, let's, for instance, I'm the central bank of Albania, right? And we already discussed this about 10 minutes ago, that no nation gives you accurate reserves of what their gold is. Right. Correct?
Yep.
Right? What's stopping me from spray painting lead bars of gold and issuing currency backed on that?
None.
Who's validating it?
Right. Yeah. No. Yeah. Good point.
Therein lies the problem. Like, if you're going to do a trade settlement between Japan and Sweden, all those currencies get converted into dollars at the New York Fed, and then rerouted back for settlements into whatever currency they want. How do you do that with gold? If you don't know, where the gold is, or even if it's a legitimate gold reserve. I mean, China had a problem where I think like 10% of their reserves were fake. I think it was like 5-10 years ago, something like that, 5 years ago. Yeah. So how do we stop that?
And the delivery system of the whole gold thing is clumsy as shit, where it's not clumsy with global currencies, particularly the dollar. But I don't think we should mention Albania without mentioning that its chief export is chrome. Do you remember how I know that? Either of you, from the Cheers episode, where Coach says you can learn anything through a song. Right? And their chief export is chrome. But anyway, but that's a really interesting thing. And I didn't really think about that, is that is one thing to have and to hold gold, but transferring gold around the world in the form of payments is clumsy as shit. Transferring dollars is a push of a button, right?
How do you move that gold, right? How do you validate it in time for the settlement of, which is real time nowadays in this day and age? How do you do that? Right.
Well, and this is really an interesting takeaway, because this is something I have not considered, and I think it's brilliant, Albert.
Yeah, and how what country is even going to send their gold to another country to do all this kind of settlement trades? There's going to be multiple nations vying for that, right? Yeah. And that only works in an era of multipolarity, which we are absolutely not in at the moment. Not militarily, not economically. Maybe in 50 years, that's a different argument. But today, in this day and age, I just don't see gold acting as a settlement process.
Before I go, we are going to have Luke Groman on this show, or on the other show. I think it's next week. Luke disagrees, and I'm curious to him to make the point too. He thinks we've entered a multipolarity world already. Lawrence McDonald's book, When Markets Talk, he talks about the same thing. Albert says no. I'm in the middle, but again, I'm just trying to predict what other people think. Bobby?
Yeah, the last thing I wanted to mention is, because you know what, this is going to be too big of a buildup, but I'm just going to say that you're kind of speaking into the Bitcoin people's, one of their main points, right? Even gold still theoretically has to be centralized, because the ability to fake a gold coin or a gold bar, is that what you're saying? Sort of on a separate angle.
Yeah. But then on the Bitcoin side is, well, who do you call in case there's a problem with the network, which there will be at some point in time. That's just not infallible. So if you, how do you reverse a Bitcoin transaction? Right? How do you stop it?
You don't, right?
I mean, Overstock tried it and they got blown out. They almost went bankrupt for that, because they would sell something for whatever 0.5 Bitcoin, and then the person would want to return, but in that price, in that time frame, the price fluctuated so much that they'd end up either making money or losing a lot of money.
Which wasn't their business to gamble on Bitcoin.
No, of course. Yeah. Of course, these are problems that people have to think through when you're talking about settlements. If the time lapse between one transaction to another transaction has such a massive fluctuation, how do you address that?
I love that. That's an interesting point. And the decentralization of Bitcoin could be the thing that sinks it, because I mean, at least the dollar is centralized and has an arbiter. Now, people may disagree with that arbiter, but there is an arbiter. There's no question about it.
That's exactly right. You need a central authority to be able to handle problems in the system when they arise, and Bitcoin does not have that.
Okay, so now I want to pivot and when you got to go, you got to go. But I want to pivot to Jerome Powell's comments. Was that yesterday or the day before? When he said, and I think this stock market rally of the last 2 days is hinged upon the fact that he said, yeah, we're getting close to the point where we're going to stop our balance sheet runoff. To me, that's a big deal, because if you're expecting quantitative tightening and we get less quantitative tightening, that's the equivalent of quantitative easing, in my opinion. Is that the reason that stock markets have gone higher, you think, in the last couple of days, or is it other stuff, Albert?
I think it's part of it. The gold trade also helps tech stocks and boosting the market and liquidity across the system. I mean, the system is like just flush with cash right now, and you have traders, especially short sellers, just getting blown out left and right. I mean, the market drops 1%, and all of a sudden, Besant and Trump come out with pumping the market with certain rhetoric, and everyone gets blown out, and you have short squeezes left and right. Certainly they want this market up to 7,000, it seems, for political optics, in my opinion. After that, when stress starts getting introduced after the new year, then we'll talk about real market correction.
Bobby?
Yeah, I'm still thinking about that other thing. I really am, because like it seems to me that what Albert is saying is there are zero, at least currently, other than direct person-to-person barter, zero infallible currency systems. Is that basically would you agree with that?
Yeah.
Here's the reason this is such a focus for me. I'm going to put something up on the screen. Luis, if you could share this real quick. I am going into Lion's Den, and I'm not particularly showing this so that anybody who's going is already going, right? This is happening, I think it's November 6th. Luis, can you put this up, please? So I am right here, right? Naples Family Office Symposium. I am arguing with literally all of these people, including Michael Saylor.
Look at you go, boy.
That Bitcoin is not perfect. It's not a panacea. It's not the savior of the world. Now, one of my stances on this, you can take that down, Luis, because again, if anybody, you have to already be here to be going, is my thought. But I'm going in there to sort of be the counterpoint. And if you look at the names on that list, I'm against all of them, basically, right? Now, I'm not a counterpoint because I don't believe Bitcoin can work, because I don't believe Bitcoin is a real asset, because I don't believe it has any value. That's not why I'm the counterpoint.
No.
I'm the counterpoint because most of the arguments for Bitcoin being the end all be all, I think are similar to people saying Bernie Madoff is the only place I invest.
Exactly right.
Now, I'm not saying that for those of you that are, fuck you guys, listen to me for a second. I'm not saying Bitcoin's a Ponzi scheme.
The only show that tells our viewers to fuck off.
I'm saying,
he means it in a nice way, guys. A nice way. Yeah.
I'm saying that if you believe you should be invested in only one thing because it's the only thing, the probability of you being wrong goes up 1,000-fold to me. Discuss amongst yourselves.
There's no question about that, Albert. If you put all your eggs in one basket, a fool and his money are soon to part. I hate this, how 100% certain the Bitcoin people are. And I own Bitcoin, Albert.
That is one of my biggest red flags, whether it be in economics or politics or anything, is when someone is arguing with me that they are 100% right and this is a 100% thing. The argument is over, in my opinion, right? Because there's no such thing as absolutes, right? Yeah. If there is a 1% chance that Bitcoin could get hacked, or a 1% chance that their network gets infected, or whatever, right? Where's the argument there? Right.
Yeah.
Look what, and on top of that, it relies on so much network capabilities that are in control of governments. Yeah. People don't understand this, right? If you want to do a transaction in Bitcoin, it has to go through government servers at some point in time. And if a government server decides to say, "Hey, you know what? We're blocking those port accesses," right? What's Bitcoin going to do? Who are you going to call at that point?
And I think that there is a greater than zero chance that Bitcoin is just a CIA CIA program, by the way. And again, my money says it's not, for all you people watching. I'm just, if you absolutely think that that's ridiculous, well, you go on thinking that, because you're not going to convince me. I do believe there's a chance of that. Bobby,
I got to jump in, Marco or Albert, before you have to go. Luis, can you put up my screen again, please? Our friend Asia, who you can see my conversation with her down here, posted this because she's at least watching the show now. I don't know, but she said Elon said some interesting things on Bitcoin. So zero heads, the money is not the problem. AI is the new global arms race, and CapEx will eventually be funded by Americans, blah, 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 right? And then Elon says, true. That's why Bitcoin is, this is why, wait a minute. That is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so, but it's impossible to fake energy. I don't understand why that, just me, I'm an idiot. I don't understand why that means Bitcoin is infallible, because it's based on energy.
I don't know what Elon's smoking crack again. I have no idea what that guy's talking about.
Yeah, we know he's a pothead.
I don't like that guy. He's such a grifter. And whatever comes out of his mouth, I don't really give a shit about, to be quite honest with you, right? The whole energy thing, of course you can fake energy. You can have a data center mining crypto on the side. It could be doing 50 different things with 1,000 NVIDIA chips. You have no idea you have no idea the power consumption a data center has with Bitcoin. You have no idea.
Yeah, and it's interesting, because I actually think the energy usage of Bitcoin, in my mind, makes it more fallible, in that if any country decides that they can't commit that sort of energy to it.
Wait till there's rolling blackouts when AI data centers come on the power grid, and all of a sudden, and then you're talking about like, hey, the EV cars, AI, making videos of Queen Elizabeth and Albert Einstein wrestling. All of a sudden, it's just crazy.
Who'd win, you think? I think Albert Einstein would win.
Yeah, right. And then you're talking about Bitcoin, electric cars, and AI data centers hogging up the power supply. What do you think governments are going to do? Say, oh, well, too bad, all you voters. You're going to be rolling blackouts for the next 10 years. No,
and we can't build nuclear plants in 2 years. We can't. We just can't do it. Yeah,
guys, I have to jump. Thank you very much. Good luck.
Yeah.
Thanks,
Bob,
Albert.
let's you and I get back to Powell for a second, because I thought that speech was interesting. You didn't expect those words to come out of his mouth, because he mentioned the labor market, and he mentioned everything else, and he mentioned inflation above trend, but it seemed like in his mind he was thinking the labor market's one of my mandates. It is weakening. Neither of us can say for sure why it's weakening. I think it has something to do with AI. I actually think it has quite a bit to do with AI. I think I'm a little bit alone on that, but he's like, shit, I got to ease regardless of the inflation. That's a big deal, right?
Yeah, it is. I mean, I think so. First of all, I think he should be referencing his speech of about 2 or 3, it's probably 3 years ago at this point, maybe 4, where he said we may need an adjusted average higher than 2%. He should be referencing that.
Yeah.
Like, he should be telling people, look, I told you we may have to sit up here. We had over a decade of below target inflation, which was kind of fun, right?
I liked it. Yeah.
Yeah. But I think he should be referencing that. And I think we're at that point now. And I think it's more luck of circumstance than by design. I don't think he sat there and said, okay, now we got it low enough. This is what I meant then. I just think he should be saying it. He should be saying, look, I said we might need a little while of above target inflation, and this is still part of that, because we had about a decade of below 2% inflation.
Okay.
Maybe,
so
maybe more.
Again, you guys who are watching this know that two and a half years ago, whenever I read that Lawrence McDonald book, I believe some of it already, and it's galvanized my feeling about commodities, about a commodity super cycle, because I believe we're running at about 2.8% inflation for the next 3 years by design, by the way. I think they need that. And when Luke comes on the show, he'll explain why I think that it's too difficult and cumbersome for me to go into now. And then I think of what Albert just said about data centers and about crypto. And I want to go back to that nuclear trade that we've been on. That I have 2 different exposures to nuclear that I'm quite comfortable with. You think that's the play for the next 5 years? What do you think?
Look, so first of all, I did see somebody talking about how the grid is not likely to be stressed anytime soon, regardless of AI or anything else like that. Now, I don't know how much I believe that or not.
Me neither.
He said that you don't build the grid for maximum use, so there's still plenty of room in the grid. Now, I'm not an electrical engineer. I don't know if that's true or not.
Government builds the grid. You know what my confidence is in that?
Yeah, totally agree with you on that. The second thing I would say to that about your comments about the Fed, I do think that they're anxious to get employment rocking again. Now, the reason I don't think it's AI at this point is because we've seen several studies where it says that a lot of companies are spending on AI, but they're not getting ROI on it.
Right.
One of the easiest ways to get ROI on it is you don't have to hire people.
Yeah.
Right. It's still the most costly thing on a balance sheet is labor.
Yeah.
So we would see vastly higher profits in the earnings report. We're not seeing that yet. Now, maybe it's coming. So that's the only reason I don't think it's AI at this point.
That's interesting. Can we take a time out real quick for commercial?
Yeah, go ahead.
Commercial break for you guys. Thank you guys so much for the support you've always given us. Right now, I'd like to ask a favor to you, and that's to sign up for free for 3 months of Tradier Pro, which is their options trading platform. We talk to options traders who've been doing it for decades and have been doing it for weeks. And they both say the same thing about this platform is that it is top notch, whatever your level is. All you have to do is scan that code. You will get 3 months for free. Thank you guys very much for your support on this. And you guys are the best audience in the world. We really appreciate it. Bobby.
Yeah, I think a decent amount of the labor weakness comes from the immigration situation. I really do. Because you're seeing
but wouldn't that make quit rates higher on the JOLT report? That's what
people don't respond to the JOLT report. We've talked about this before.
Okay, that's a good point.
The responses for the JOLT report, this is according to Mike Singleton. He said the responses on it are so bad and so inconsistent that he rarely looks at it as any sort of.
But he also said the only valuable takeaway from it is the trajectory, is the direction of these things.
Yeah.
And quit rates is still going lower, not higher. But again, maybe you're right. Maybe he's right too.
Firings go into the quit rate. Like if illegal immigrants get deported, do they go in as having quit?
No, it's only quitting on your own volition. And that's the reason I've always loved it if it was accurate, because nobody quits a job unless they have a plan. And and if nobody has a plan because nobody else is hiring, that to me means the labor market is bad. But again, if you are correct and the data,
I agree with that point. I think that's a great point. But what I'm saying about the weak labor market is if you don't have anyone to hire, the non-farm payrolls numbers aren't going to go up.
Right.
Because you're not hiring anybody.
Good point. Yeah.
So to me,
that's why I went to the quit rates instead of the labor numbers. Right.
Yeah. And I mean, people don't quit a job and say, I don't know, pick one, just pick a random job as a bank teller. Okay. To go be a landscaper. No. So I don't know that it would show up that way. We're seeing weakness in the higher end of the labor market for sure. And we are seeing the participation rate stay steady, but you're seeing the overall labor force go down. So it's weird. I don't know why that's happening. I don't know to what extent, and I've had this conversation with Singleton as well, to what extent illegal immigrants are in the labor numbers at all. Yeah. I have no idea. I also want to bring up, Luis, if you could put up Tim's comment real quick, because this is something else that we should talk about. It sort of refers to the global central bank theme, is the Fed has turned really dovish. We talked about that. Jim, you and I both agree on that. But did you see the Swiss National Bank has negative yields again?
I did.
So there is a trend here globally. And despite Christine Lagarde talking about being data dependent just means to me they're going to cut. It really cracks me up when they say that.
Yeah.
It means they don't know what the hell they're looking at.
Yeah, Timmy, if we're going to negative yields again, that's just the weirdest shit to me in the world. Negative yields and remember one point in time, like 20% of global sovereign debt was yielding negatively. I don't get it. It is crazy to me. I do think if we have some stress, some economic stress, they will go to negative rates, and then they will really want central bank digital currencies again. Another reason maybe that gold gets even more of a bid because of negative yields. You agree, Bobby, or no?
I do, and I don't know what to think of gold. I mean, I keep looking for a reason for gold to drop, and I can't find one in the current environment. No. I can find reasons why gold should drop, but I just don't see them in this environment. I have the play creeping back up, right?
See, I have the play, and I'm going to my speech at the New Orleans Investment Conference in 2 weeks is going to be hard money versus an easy Fed. And should I give this, because there's going to be a bunch of different things in it, but I'm going to tease you guys. So one of the things I'm going to talk about is owning physical and then hedging it fully in the paper markets, which is way better than the reverse. Because if the shit really, really hits the fan, you're going to love having the physical gold, and you're going to forget about the fact that you're losing money in the GLD, whatever, too, because that you will have more pressing issues. So again, I think that that's the way to play it, and I'm going to outline that in pretty detailed fashion. You like it?
I do, and I'm fascinated with the gold concept right now, because we've had other assets go parabolic like that.
Yeah.
But we're all so crazed that gold has done it, and I'm not sure why.
Yeah.
Like I said, when I think about gold, I can't think of a reason for it to go down in the current environment.
Except for the price.
What do you mean?
Except it could be stretched to shit.
Yeah, it's high, but that to me is not really going down. So like if gold, what was gold today? 4,200 and change?
Yeah.
If gold drops from 4,200 to 3,800 and then moves sideways, I'm not going to see that it's gold going down.
No, I got
personally. I mean, obviously it dropped in price. That's just the way that I'm looking at it. You would be right and I would be wrong. But in the way that I'm looking at it, I would be like, you guys are saying that gold went down to 3,800.
Yeah.
I mean, gold has had 9 new all-time highs. Here's the stretched part to your point. 9 new all-time highs in the last 13 sessions. This is at a tail end of a rally, and it's still making these highs. I wrote this down like 2 weeks ago. Okay. It's this card, and I have it here in case I needed it, but it's outdated already. That from the time that you and I called gold being a good trade, so November 2023 or so.
Sure.
Gold was up 134%, something more than that now. Silver's up 130.5%. I was surprised that silver was up close to the amount of gold, and Bitcoin was up 206%. But on a risk-adjusted basis, gold blows both of them away because there just hasn't been a drawdown.
Yeah.
When it had its corrections, it was a sideways correction that Mike Arnold taught us both about in one of our sessions with him. Yeah. So I try to think of a reason other than it needs to correct. So let me put that out there. Do you have one for?
Yeah. Because I think the correction could start. Okay, if it gets stretched, we both agree that it doesn't take much of a push. Oftentimes in the TMZs of financial stations, they're like, gold is going down because, and then they'll give some headline that could be innocuous and could be not. I believe that once a lot of people have piled into this trade, and I believe it's being piled into on the retail level too, I do think if a trade deal comes across where China and USA were back loving each other again, and Donald Trump is capable.
Okay, that's good.
He's done that before. Then all of a sudden he'll say, and remember, this part is done for too. He came back with a deal from Japan and from China in his first administration. I'm 80% sure of this, but Bobby, you can check me if I'm wrong, where they agreed to buy a certain amount of treasuries as well. Well, if they agree again to buy a certain amount of treasuries to drop all the tariffs and do whatever, gold could suffer from that, and it could wipe out the latest round of weekend buyers. I think 3,600 goes down to. Thoughts?
I'm going to put up a chart real quick.
Sure.
Luis, as soon as you see this, can you put this up, please? This is a gold chart. And the reason I'm putting it up is this. This is a daily gold chart. Here's where Trump threatened the tariffs.
Okay.
And here's where he reversed them.
Okay.
Are we saying, and this is a legitimate question, this entire thing was Trump China?
No.
Or like just this part?
Just that part. I actually think
I'm honestly asking the question.
No, and I believe that the part of a backbeat to the gold trade for a long time has been unresolved trade issues with China and them buying gold and not buying treasuries. But I do think the vicious up move is retail getting in, like the last stage of whatever bubble creation is. And by the way, the last stage of whatever bubble creation can go on for months and months, maybe even years. I'm not saying it can't. By the way, can you condense it a little more? Because I want to show you why my target has always been basically 5,000. So
obviously the bottom is volume. So I'm just putting that up as a
So you see where this move up to the consolidation pattern that was very pronounced right there. By looking at it as a measuring objective, once it breaks out of there, it's supposed to equal the leg that fed it. Well, actually, you can make an argument that there was a consolidation pattern back in late 2024 as well, and that leg higher, which we about fulfilled the target on right now. So again, I'm getting more cautious in gold. As I said on the Kudlow show 3 weeks ago, is that my focus was way more on silver than it was on gold. Now gold has been demoted as in my stewardship of fiat currency stupidity hedge account. So yeah, gold. I don't like buying that chart. You?
No, I don't like buying it for sure. But what I'm trying to figure out, and I'm drawing these lines for a reason now. The last 3 corrections in gold have been sideways.
Yeah.
And I'm drawing the green lines to kind of represent, here's 1, here's 2,
Clear.
here's 3. Okay.
Yeah.
And they all involve decent drops. Like for this particular one, let's just stick with this one. The high was 34.42 and the low was 31.70. So it's what, a 10% drop approximately?
Yep.
And then you like look at the volume here that's been happening. If we're going to get a sell-off, this is the kind of volume that you would expect to see just before volume spike. They would expect to see, but just before exhaustion, right?
So what about if I, if I have a bunch of GLD in my retirement in tax-free accounts, because and we all hate paying taxes. And I hate paying cap gains tax. What if I'm thinking about converting that GLD, selling out of it, buying calls, then calls to represent that? What do you think? Define the risk.
Selling out of this and buying calls to represent it.
Yeah, to keep the same double. Like for every 500 shares of GLD, I'm long in those retirement accounts. So it's kind of like buying a put. If you sell out of those, you know what I mean? So and then buy the calls in case it explodes to the upside. Because if it's moving to the upside, I have a difficult time thinking it's going to keep grinding.
Yeah, longer dated, I'm fine with it. Longer dated calls.
That's what I may do.
And the reason I say that is because if we get into another, I don't have the screen up anymore and I don't really want to put it back up. But if I just look at the most recent sideways correction, if I take it from its true level, that thing was 135 days.
Yeah.
So you buy those calls and they expire and then
I'll be
again.
sucking wind.
I mean, I guess you're looking at it as like, I made my money, I'm done. And it's not like you're taking that money and putting it under the mattress.
No, I'm putting
it. You can invest in other things. And
yeah, maybe I'll do it for half of it. I don't know what to do on that. Let's talk about equities.
We had Albert on for 20 minutes and I'm distressed. Like I want to do another hour with him because
I know
he struck a chord with me with that. Like there is no way to solve all this.
Yeah, no, and I loved what he said. The takeaway about gold being a clumsy means of transactions because of verification, because of protection, because of transportation is really interesting.
It is interesting because like one of the things I'm going to say at the symposium, and if anybody that's speaking with me, or I should say against me at the symposium is listening, they'll know this. There used to be this argument that you couldn't transport enough gold. It was too heavy, right? But if I went and you're going to bring the same cold wallet to buy a $20,000 car. I used to need 10 coins. Now I need 5. I can carry 5 coins to buy.
Gold got a lot lighter. Gold got
a lot lighter, and it can continue to get lighter and lighter and lighter.
Yeah.
But I don't know if anybody there, maybe Michael Saylor will. I don't know, but I don't know if anybody there is going to say to me, "Well, how do I know it's not fake gold?" You don't. There has to be an intermediary.
Yeah.
Right. And you do. Wow. I might be becoming a Bitcoin guy. You do have a system to say if it's a fake Bitcoin. You have a system there, right? It's the verification by all the different miners and nodes and et cetera. I'm never going to use the terms correctly.
Yeah.
But when he talks about a problem with the network, that's not really solvable.
Roads lead back to the dollar, don't they?
I haven't drank in 3 weeks and I might today. I'm very distressed that I work so hard and I may end up being broke anyway.
There's no question about it. That's what we're trying to do. Again, the point of my New Orleans speech is not going to be about speculating to gain wealth to buy the house on the beach. The problem now is keeping our wealth, maintaining our purchasing power. And to do that, it's going to be a mashup of different assets. If anyone thinks there's one asset you can buy, well, there might be one asset you can buy, but if everyone thinks that's the safe and responsible route to protecting your purchasing power and keeping what we've made, I think they're idiots.
Yeah.
But do you want to call it? Or do you want to talk about stocks real quick?
Real quick about stocks. I'm underwhelmed by the last 2 days of rally. Or last 2 out of 3, I should say. What do you think?
Did the NASDAQ come out of the weekly rotation zone today? I don't think it did, right?
Well, I don't have it in the weekly rotation zone. If you're talking about the low from last week, yes.
I thought today it went back into it on that down move.
So I could do one more chart. You're talking about the weekly, right?
The weekly bars. Yeah.
Let me, Luis, I'm going to put up one more chart so we can just talk about this. We have the time, so why not? Let's see here. I'm so good at this.
You're excellent at this. Old guys are so good.
I'm getting better. The last time that you guys lost me, it's because I was trying to stop sharing my screen and I closed out of the session. This is the weekly. So the rotation zone is here. Oh. So the wick did go in it, right? But what I'm looking for a go into the rotation zone, I'm looking for this, not this.
Yeah, I got you.
Well, so it's holding up right now.
So the rotation zone is holding up, and we have an inside week.
Yeah, we do.
I do think if we close this as an inside week, then my path will be relatively clear. If it closes as an inside week, I want to see some strength above this week's, even the candle, even the wick, I mean. And then I think it's game on. But until that point, like I said, I bought more puts today. I'm scared. I believe that being prudent is the best way to go. We've all made a lot of money on this rally. I think the only way to really have this be an awful time in our lives is if we let it all ride and then all of a sudden, boom, it's 15% in our face. Does that make sense?
It does. I've got 3 posts in here that I want to put up, questions from regulars. And again, Asya, thanks for being here. She's having a conversation in here.
We love you, Asya. Oh, no. What am I supposed to say to you, Asya? She told me today is I love what you do, Asya. Exactly. We were discussing.
You did say that.
Yeah, we were discussing the whole I appreciate you, where it used to be I appreciate it. And it sounds like therapy speak for a self-affirmation society or class of people. And we don't like it. So instead, I'll look at you and say, I love what you do, Asya. Yeah.
I had a friend from Texas who always said, appreciate you.
Appreciate
it wasn't
you.
I appreciate you, and it wasn't appreciate you, it was appreciate you. Anyway, so the first one I want to put up is from its stock chart. Luis, it starts what gold ratio. What gold ratio has historically been the most accurate measure of gold being overvalued, overbought? I think somewhere in the 100 range, Jimmy.
Well, we traded up to 107 a couple weeks ago. I mean, a couple months ago. And to me, that clearly indicated a pairs trade. What I did, and I said so very much at the time, is I just went long the silver part of it, thinking it was going to correct in that direction. So I made a directional pairs play and left my gold longs the way they were, just increased my silver longs. And that's ended up being a great trade. But historically, up till 2017, the ratio was about 70. After 2017, the ratio shot up on average to about 82 to 85. Now we're trading at about 79. So I think right now we're back in balance, Remo.
Yeah.
So, yeah. I just want to be long both of them then.
Yeah, I thought it was around 100, but I'm glad you filled in on that.
Sure.
Timmy wants to know
sometimes of my wealth of knowledge to just boom. Yeah, come on, say it. I appreciate you.
I appreciate you. Timmy
you.
wants to know if we have any thoughts on uranium.
Damn straight I do. I have a shit ton of thoughts on uranium. Mine. I'm long. Again, I'm not recommending individual stocks for anyone. I'm long UEC. I'm long NLR. And Timmy, I think that uranium is it. I think that is the only solution to the power needs we have over the next 10 years. And if we don't build the nuclear reactors, who cares for the trade? China will build them. Russia will build them. They need uranium. So I am not up to my eyeballs in it. I wish I was, but I have some exposure to uranium that I plan on keeping and increasing.
Yeah, I'm on board with that trade completely. I totally agree. Timmy, it's a good trade. Remo, again, it's stock charts. Actually, let's put up Asia's heart because that's to Jimmy. There you go. She's the best.
Appreciate you.
She's the absolute best. Appreciate you. So it's stock charts, Remo again. Rye stones, those are sometimes called Fey stones, by the way. These massive circular stones, and they were used in the Pacific Islands as money, difficult to move, yet it was more, what does he say here? Yet it was used then as currency. It'd be interesting to say, that's mine, don't move it.
Yeah, but then do you write notes on it? You know what I mean? Maybe you don't move it. Maybe just you transfer ownership of it. And again, maybe the lime discs are something that you can see and they can't be replicated, whereas gold can be faked or forged. By the way, I'm just spouting this off the top of my head. I don't know shit about this, nor have I come to any sort of internal conclusion.
I'll tell you a little something about it because I actually do. They were not mostly, but they were significantly used on an island called Yap, which is in Micronesia. and they had holes drilled in them so they could be like moved around with big poles, like bamboo poles, and they would move them around, but they were difficult to move. And they were limestone, which is not native to the island. So they had a built-in limited supply. Right. So that's
Sounds
kind
like
of the thing.
Bitcoin.
Always
Sounds like a
anything
clumsy
that has limited supply all of a sudden becomes money.
Yeah.
How about Italian guys wearing tight t-shirts? Those are a dying breed.
There's a dying breed. They should be money. There is a limited
should
supply.
be money.
All right. I'm going out to dinner with my daughter.
All right. Tell her we said hello. All
Guess
of
where
us.
guess where she wants to go to dinner.
8,000 of us in here right now. So
well, 8,000. Tell her guess where she wants to go to dinner since she's in town. Brant's Palatine, of course.
There you go, Brant's Palatine.
Brant's Palatine.
I'm just glad it's not freaking Olive Garden.
Oh no, my daughter's a good Italian. Yeah, she doesn't look it. She's blonde, but she's a good Italian.
There she goes.
All right. Thank you guys very much. This has been the Trader's Edge. Thank you to Tradier for hosting us. You guys are the best. If you want to go into a more granular level on these topics we talk about and actionable trades, please join us on unfilteredinvestor.com, where we partner up with Mike Arnold and Bobby. I hate to give Bobby compliments, but the two of them, as far as technical analysis goes, are complete whizzes. You have to figure out, you got to get in a rhythm with what they're saying. But once you're in that rhythm, it all makes sense and clicks. Please check us out, Unfiltered Investor.
I'll give you guys one real quick. I'm not going to give you a trade that we're looking at. I'll give you a trade that we did. We sent out an alert on Monday to buy a stock that not many people have heard of, Woodward, and we bought it. I have it listed here. What we bought.
No Bernstein, just Woodward. And go on. Yeah.
Yeah, Woodward. They make like covers for electrical systems.
Okay.
We bought it about 258.05, and it was up almost 3% by the next day. Now
Just
today
with
it pulled
technical
back
indicator.
a little bit, but what's that?
Nothing fundamental, right?
No, we didn't put it. Well, we didn't put any fundamental on the midweek ones. We do on the weekend ones.
Right.
We're just trying to get the alert out. But we think down the road they can actually benefit from electrification, but they're not there yet.
Got it. Okay. Thank you guys for joining us. This has been the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.